Hey traders, Nick Shaheen here looking at Salesforce. CRM is the ticker, salesforce.com. This is the original cloud play, so to speak. They made it popular to have a subscription service, and it revolved entirely around the cloud. The idea was to client relationship manager, which is what CRM stands for, how to stay in touch with your clients through the cloud. It's a great idea. I did it for my own Salesforce a long time ago, but using crude methods, and I didn't know it wasn't available at the time. I just built it in-house. But it's a great idea because then it almost makes every salesperson in the company or customer rep do what they're supposed to do, because basically they're prompted with the screens and they have access to all the data they need, so it's very quick. Anyway, mother of all momentum stocks as well. This is 1 year's worth of data. I think it's a daily chart, so every candle is 1 day, and you can see I've got lots marked up on it, but if I take them out, you can see how it goes up and down a lot and fast and long. This here was the tizzy last year, the October breakdown, and then the December lows. Technically, it kind of obeys the rules of the chart patterns. Here was a head and shoulder. You can draw whatever. It's the baseline, the neckline broke down and then fell below it, came right back too fast, came back down. This was an earnings spike, gave it all back up almost, and then rallied. Up here was a cup and handle that lived up almost to my expectations of the highs. A few pops faded. We're talking about this area right here now. A few breakouts faded, and here we are. So basically, if I mark it up, let me see, where is it? Let's bring a scratch pad. All right, failed, but that was from a neckline that was down here, kind of a big rounding bottom, cup and handle, whatever, a neckline here that was broken out, right? So if I extend this neckline, look what happens. Support all the way through, even this week and last week. So as long as the support holds, this should happen. So they'll ping pong inside this box right here until one side or the other gives way. So they ping pong up and down until one of them breaches. And if one breaches, it'll be up. If one breaches, it'll be down. So the downside is probably this neckline. So if I have put spreads, I would sell them below this, and I'm pretty fine. If I want to say, okay, coin flip, this is the bottom for now, I'll sell the put spread right underneath, but I have to accept it that the odds are very low. It's like a coin flip. It's almost like buying a stock, saying it's going to go higher from here, and I expect losses immediately if I'm wrong. Whereas if I sell it down here, I take in less money, higher odds of success, and so more money at risk because I'm taking in less money. So it's no longer collecting half the spread, but that's matter of preference and matter of thesis. So here, if the thesis is there is support and this tizzy, overall market tizzy, is going to pass, then this should happen. How high up it goes, it's not, I don't care, but I think there'll be level of resistance here where we're at today. Level of resistance here. They're not hard lines in the sand, they're zones, so I'm going to say 162-ish, because look, that was kind of like where it was before. And then obviously the highs, maybe 164. It all depends on where you draw your lines. So there are, let me see here, yeah, 162-ish, 163.5, and then the highs. Momentum stock, good company. It has almost nothing to do with China. I mean, if companies are still needing, they want to be efficient and effective, then they're going to need some sort of a solution like this. And the CEO, it's a co-CEO situation where I wish it wasn't, because I do like Benioff. He is like the perfect CEO to represent the company. Not that he's a genius at what he does. There are better CEOs out there. Nobody's better at talking his company like he does. So when he's on a call, he's not going to mess up and open his mouth. Plus, he's loved by the CNBC folks, so chances are they will lend help if help is needed after an earnings report. I don't know when they report, so let's see, last time they reported late August. So here's the pattern. We've got contracting range. So the range goes from this wide, narrower, and then it's going to come to a point and break down or break out. That's the potential. So if the market, here's my statement, if the markets find their footing here, then this one will go higher. My thesis is markets will find footing. This is different than December. In December, we had the Fed that was combative. Now we know the Fed is in our corner. If things fall off the wheel, they will cut rates. We know that. They didn't say they will, but they will, because they're playing nice. This is different than December. China is not playing nice. Nothing has changed there. They kicked the can until late June. So now we're just suffering with the remnants of the same headline over and again. Without new headlines, I bet you we hold the line, and CRM is probably going to go higher. This is my own personal thesis. So if I drill down to see if I can get smarter levels, probably not. Just, you know, I can't be picky. I mean, today it's up 3%. So if I don't like chasing up days, if I'm already long, this is encouraging. I don't add to my longs. I'm looking to go long. Maybe I'll wait to see the breakout of this trend, or maybe I'll just plug my nose and buy it for the long term. If it's a long-term trade, I bet you this one will go higher. So let's test that thesis. So if we go to a daily chart, maybe even a weekly chart, let's see where it came from. So tell me this is not a winner long term. Okay, let's, you know, this is probably all the data that there is. This is like Amazon. Same shape as Amazon stock, okay? You can tell there's a difference. So Google is more tapered. The other two are momentum stocks. Look how they go. Okay? So long term, this looks like a winning company. They grow sales like nobody's business. What is this? They're well represented, well managed, so it's a winner long term. Nick signing out.